afternoon, everyone, and welcome to PBA at Noon. I'm Paul Benwell, and I'm joined by my colleague, Sophie Caesar. We are really happy to bring back UGE International. For those of you who aren't already familiar with this story, they are a solar and renewable energy solutions company focused on providing commercial and community energy solutions. UGE has been very busy of late. They have signed offtake agreements with T-Mobile and Bloomberg. Industrial Alliance has picked up analyst coverage with a target of 325, and their pipeline growth is up 10 times what it was last year. UGE trades on the TSX Venture under the symbol UGE and is currently trading around $1.48. Here to talk with us today is the CEO, Nick Blitterswyk. Hey, Nick, it's good to see you again. It's been a while. Please feel free to get started whenever. And if anybody has questions out there, just send them in and we'll ask them of Nick at the end. Thanks so much. Go ahead, Nick.
Yeah, thank you so much, Paul. Thank you so much, Sophie. And it's been, great staying in touch with you guys over the years. And as you just alluded to, Paul, it's been a lot of growth and evolution of the company, especially in the last 2 years and last year in particular. So we're excited for where the company is going, excited to get back and introduce the story to new folks and give those familiar with the story an update. So, just off the top here real quick, like Paul said, we are a solar developer. We'll go down into the specific details of what we do as we go through the presentation. We are listed on the TSX.V and market cap currently is in, I think, the 45 to 50 million CAD range. We're 90-something% of the work we do is in this mid-scale space within the US, which we'll talk a lot more about as the presentation goes on. But we're excited for how things have come together here. So number one, just off the top in terms of why we think now is a great time to be looking at the company. So number one is we focus on the mid-scale solar space. Within that sector, a sector called community solar has really started to take off, and it's something that we've been a pioneer in since it's taken off in the last few years. It's actually the fastest growing segment of the overall US solar industry. So it's a great time to be involved in that part of it. And at the same time, we're growing very quickly. Our backlog grew almost 10x from the beginning of 2020 to the end of 2021. So it really seems like there's a right place, right time aspect to what we're doing. Number two is over the dozen or so years since I started the company, we've built up and evolved the company to this point where we have this full life cycle solution, which is providing a great competitive positioning within our market. It's surprisingly capital light. So the way that we develop, build, own, operate our projects, you'll be surprised to see just how little capital we need to put to work to make these assets come to life and provide us with these long-term returns. And then lastly is that we, as an overall group, we have over 500 megawatts of overall experience, which is over 750 projects. We know very well what we're doing. We have a tremendous amount of experience in what we're doing. We work with key companies like T-Mobile and Bloomberg, 2 recent wins for us. So within our industry, we're seen as a very strong company that knows what it's doing. I think that the opportunity for investors may be that in around 2020, we pivoted from selling our assets and having a lot of one-time revenue to holding on to our assets and building up this recurring revenue base. As we made that pivot, revenue really fell off a cliff and is in the process of growing up again as this recurring revenue comes online. And so I think that's a disconnect between the size, scale, and experience of the company versus the current revenue profile. And I think that that's one of the reasons why there's we would say a pretty big discrepancy between the value that we see in the business versus how we're valued in the public markets right now. I won't go into too much detail on the history of the company. I mentioned that we're about a dozen years old, and I was the original founder of the company. The industry has evolved a tremendous amount in this time since we started as a company. Early on, it was a cash market, well-capitalized companies that were buying renewable energy projects for their own rooftops or what have you. As the industry evolved, it got to a point where finance projects or a power purchase agreement were the norm. And in that, you'd work with a company like Walmart and IKEA were 2 that did a lot of these PPAs. But then the issue with that is that less than 10% of commercial clients own the buildings that they're in. And so they can't actually put solar on their building. And so because of that discrepancy, the mid-scale solar market still wasn't catching up as quickly as we would have liked to the residential space and the utility scale space. What's really changed and allowed us in the industry to really take off in recent years is this community solar segment, which I'll talk more about. And so now the norm is we're working with clients to lease their rooftop or lease their space, install a solar project, and monetize those projects in a different way. So we'll come back to that, but we're excited for how the company's evolved over the life cycle here. Now, I'm sure that some of you look at solar, every week. Some of you are just peripherally aware, and some of you may even be skeptical about the overall technology. So, just briefly, solar is now the cheapest source of energy on average for the U.S. and many countries around the world. So, this isn't from us. This right here is from a study Lazard puts out every year. And in terms of actual deployments, solar is now 40 to 45% of all new energy capacity being built in the U.S., trending towards 80% of all new energy capacity built around the world by 2030. So if you think about the overall pie of where energy is going to come from, solar is the dominant source of where it's coming from. So, exciting for the industry and excited for where the technology is going. Now, within the overall solar industry, though, I talked earlier about this, but you have the residential space, the mid-scale space, utility scale space. This mid-scale space was traditionally C&I. Community solar has been growing really rapidly in the last 5 years, and that is actually becoming it's actually in the next 12 months going to be larger than the rest of the C&I space. You see here the colored in states are ones that have community solar regulations now. If you go back to a presentation of ours a year ago, it would have been around half as many states. So this is growing quickly. There were 22 states in 2021 that passed some level of forward positive progress legislation on community solar. So we're expecting all states to eventually have community solar, hopefully by around 2025. We were the first ones to develop this type of project in New York City, the first ones in Maine. So we've been a pioneer as this market's been growing here recently. The Department of Energy came out with a goal in October to grow community solar by another 8x in the 4 years leading up to the end of 2025. So again, it really feels like we're in the right place, the right time. And again, going back to how these come together and why it benefits so many groups. On the one hand, all the buildings that are owned by REITs or what have you, or maybe it's undeveloped land or whatever the case may be. In the past, those spaces would need to use that energy themselves for them to be considered like a mid-scale or distributed generation project. What community solar allows us to do, install a project there and then remote net meter that energy credits, those energy credits to other energy users within the same utility zone. So it's really opened up what we can do here in terms of expanding the market. If you compare it to, if you think about residential, multi-billion dollar market cap companies that are out there, in the past, C&I has been lower than residential, but community solar is growing very quickly and is catching up to and will surpass the size of the residential space going forward here as well. So we're excited for the growth of this industry. So now UGE, in terms of how we're built and how we stand out within this industry, so number one is, mentioned this earlier, but we are a full life cycle approach here. So we have origination and development people on our team who are going out there and meeting with clients and sourcing these projects and bringing them up to the point where they're ready to build. We then hire subcontractors to build those projects for us. We finance and own operate these projects. Historically, UGE was more on the develop side. 6 years ago, we bought that middle piece to engineer and build these projects. And then really that pivot that I mentioned earlier over the last couple of years is where we've built up the expertise to finance and own and operate these projects as well. The sector that we're in, it's very siloed. You typically have companies that are just developers or just builders or just funds that own and operate these projects. So we really stand out by this full life cycle approach to what we do. And in terms of how this benefits us, how it benefits the industry, how it benefits our investors, number one is it allows for a very capital light approach. So the returns on our projects, and we'll go through an example later, but just on like on an unlevered IRR basis, we're talking about low teens in terms of the lifetime IRRs that these projects produce. If you compare that to utility scale, you're looking at single digit IRRs on a levered basis. So they're much higher returns in our space. And because we are doing like the full life cycle from origination, we're capturing those returns ourselves. And so what that means for us and for our cash needs and for our investors is that our projects are fully capitalized by the tax credit available in the US, plus the non-recourse, non-dilutive debt that we bring in from banks to fund the build out and ownership of our projects. So we don't need to raise equity to fund our projects. Rather, our projects are funded by the nature of their cash flow returns over time. And then number two is, unlike our competitors, which are very siloed, we are completely focused on the full end-to-end, like how do we maximize the returns and value and efficiency of the projects that we're doing. And what this means is that we get superior returns as a company. Our clients get a superior service from us being the one company that they're working with throughout the process. And this has really allowed us to stand out and really accelerate our growth after we made that pivot. And then lastly, our base contract for our projects is typically at least 25 years. So as we develop these projects and turn them on, we have a very, very long cash flow stream sitting out in front of us. So this compares very favorably, obviously, to like a software as a service company. It also compares very favorably to the renewable IPPs, which typically, because they're often acquiring those assets or what have you, often typically have a remaining life of 14 years or so from the analyst reports that I've read. And so in terms of how this rolls up to UGE and to how we are earning returns for our shareholders. So of course, like the main focus of the business is these assets that we're developing, and those provide those very long-term returns. These are assets that sit on our balance sheet and accumulate over time. And then also in the short term, we do capture this positive distribution from our projects based on that capital light aspect of them that we talked about earlier. We actually don't put money into our projects. We're actually able to take money out as we build out those projects. So that's a huge help to us scaling up the company. We do some consulting work. We have a technical consulting group that is working with, whether it's a commercial client or whether it's another developer, getting paid high margin revenue to provide some of our expertise to other participants in the industry. And then lastly, is we always have the opportunity to sell a project if we so desire. And partly that's a good non-dilutive source of capital should we wish to go that route. But even more so, it allows us to put a very tangible value on the business that we have and the business that we're doing. And we'll come back to that and show just how undervalued we believe we are right now. So we have been growing extremely quickly. Just in terms of 2021, we started last year with a pipeline of 100 and something megawatts. We ended it with over 1,000 megawatts of pipeline. So, our growth has been astronomical. I really credit this to the great team we have and the great team we've added in the last year in particular. So we're seeing a tremendous amount of opportunity out there. Our actual backlog, which is the minority of our pipeline that is the most mature and is working its way through the steps to become operational assets. We ended last year with about 160 megawatts in those stages, which was up from 60 megawatts at the beginning of the year. Talked about this, but because we used to sell our assets and do work for others, the operating assets is the last piece to scale up, right? And if you look at our income statement, which we have on a later slide in here, it grew about 10x in terms of the recurring revenue in 2021, and it's going to continue to grow exponentially as the backlog reaches that stages. And based on all the experience that we have, we're fully capable and confident that we'll be converting that backlog at a good pace in the quarters and years to come here. The most important part of our pipeline, our backlog, we had grown that in 2020 when we had made the pivot from about 17 to 60 megawatts. We were super excited about the speed at which we were growing. We set a goal to grow that to 120 megawatts, which frankly, I think a lot of people question if we were going to be able to do that. We ended up at 158 megawatts and change last year. So, we grew it by virtually 100 megawatts last year. Again, this is looking at, we'll put some values on that later, but suffice it to say, it's a lot higher than our market cap. And then for 2022, we have the pipeline, everything else in place to continue to grow our backlog and then have that turn into operational assets at just as good of a pace as we've been doing. Now, if you look at the analyst reports, Paul mentioned off the top that IA just came out with coverage here recently on us. And of course, if you look at those analyst reports, you can see you can see the discounted cash flow aspect of things. You can see the multiple of EBITDA aspect of things. Because a lot of our industry is private, most of it is, there's also this secondary market that I referred to, where a lot of developers will sell their assets, et cetera. And that also gives us a chance to look at like, what is the sort of like the net value that a developer can get from these projects if they just developed and sold them. And so we talk about this as the net value retained, which really at the end of the day, we're looking at the net cash flows on a discounted basis to get a sense for what that's worth. We have in our presentation an example from one of our New York City projects. On the left-hand side, it really just approximates where we earn our value as we go through the development life cycle. I won't spend too much time on that. On the right-hand side, though, it talks about, hey, a certain amount of this net cash we get up front in terms of that developer fee that we talked about. And then the rest of it is the positive cash flows over time. We discount those back at a discount rate of 8%. And together, we get this upfront value of, in this case, 81 cents a watt. You apply that across 100 megawatt goal in terms of our operational assets, and it would be 81 million USD in terms of the net value to UGE. We more broadly talk about a goal of 50 cents to $1 per watt, but going back to the 158 megawatt backlog that we had on December 31st, you get a value of 80 to 160 million USD for the value of our backlog versus the sub 40 million USD market cap we currently have. And that, of course, is before we start talking about our pipeline that sits behind that. Now, some of you may be still scratching your head and saying, how did this come together? What do these projects look like? So it is quite a bit different than your traditional solar projects from, say, a decade ago or even 5 years ago. It's not a case of big box hiring us to put solar on the rooftop. It's a very different game. We're the quarterback that's out there looking at, hey, where do we want to put projects? Where are we going to generate good returns? It's us locking down the space to do that. And so the real estate owner is getting a lease for the space that we're capitalizing on, and they're happy for that rental income. And then energy users, we're selling this energy to those energy users through these net metering frameworks, through these community solar frameworks, giving those energy users a discount of 10% off of their grid rate. And of course, it's clean energy as well. So everybody's happy. In terms of how we capitalize these projects, there's the non-recourse debt that we bring in at the project level. There's a tax credit in the US. We use that to fund the CapEx as well as the distribution out to UGE. And then we end up with an IRR of around 9% plus the developer fee, or if you just looked at it as an IRR, it tends to be in the low teens. Where we go forward from here, so we have a 158 megawatt backlog that grew much quicker than we were forecasting last year. These goals we set at the beginning of last year to get to that 100 megawatt of operating assets by 2024. We're ahead of schedule on that, but we'll come back and hopefully update our targets in time. We also set a goal that by 2024, we'd have the capacity to add 100 megawatts of backlog per year. We had it just under 100 megawatts last year. So we're looking forward to, we're in essence 3 years ahead of that goal now, but we look forward to putting a real stamp on that this year as well. Again, I invite you to look at the analyst reports if you have access to them in terms of how this trickles down to like EBITDA and so on. But one of the metrics that we put out there is that for 100 megawatts of operating assets, you'd expect about 15 to 18 million of annual project level EBITDA. Our overhead right now is about 6 million. And then of course, we'd be adding to that again on an annual basis with the annual capacity that we're adding there as well. On the public market side of things, the market did trade down a little bit here over the last week. So we're a little bit lower than this, but I think our equity value and our enterprise value on a fully diluted basis, I think are in like the low 50s million CAD. Insiders still own about 40%, and you'll see us being very supportive of the company over time, thinking that it's a great time to be investing in the company versus where we're going. To put a pin in it one more time, I'll say the 158 megawatt backlog, we'd put a value of 80 to 160 million USD on that backlog in terms of the net value to UGE, so several times our current market cap. The financials are there for you, to anyone who wants to take a look. The only thing I'll touch on here is that after making that pivot, the recurring revenue from our energy production, started at zero, and it's just starting to pick up and grow exponentially. So you see the 2021 being, in the neighborhood of 10x what it was in 2020, and going forward from here, you're going to continue to see that scaling up really rapidly as the operational assets catch up to the backlog. And then also some recent updates to add here as well. In the last half of last year, we did sign an 81-site LOI with a large real estate company, which we hope to talk about the relationship with them more in the months to come. That's in pipeline now. It's not in backlog, so we look forward to those projects entering backlog in the months to come. And then also we announced an expansion into Massachusetts in November. That would be a new state for us. We announced that expansion with over 100 megawatts of client commitments. So again, not in backlog yet. It's in our pipeline, but we look forward to both of those aspects leading to significant backlog growth this year, which again was 158 at the end of last year. On the energy offtake side of things, the community solar space largely started out with individuals that live in a condo or a rental house or whatever buying energy from these systems. But as we've scaled up and as the industry has as well, we started forming relationships with T-Mobile, Bloomberg, and hopefully more to come on that side of things as well. And of course, really adds a lot of credibility to what we're doing and so on too. And then lastly, I mentioned 22 states passed some level of positive legislation for community solar in 2021. So that map we saw earlier will continue to expand as the market for community solar expands here too. And I know that the Build Back Better Act is currently on ice, but the biggest portion of that Build Back Better Act is incentives around renewable energy. That was the least controversial part of the Build Back Better Act, and so we're hopeful that there will be something that gets done this year, which would provide another amount of upside to what we do here. So lastly, in terms of some highlights, just to summarize, we have a ton of experience doing what we do, and so super confident in our team's ability to continue to execute and grow the company here. The community solar aspect is the fastest growing part of the overall US solar industry. It's going to continue to grow for many years to come. So excited to be where we are. We have this backlog, which is giving you a really good line of sight to where we go from here. And then this full life cycle approach to what we do really stands out amongst our competitors, amongst our market, puts us in a really good position to continue to be very well positioned for growth. So quickly flash our team on the slide here. Stephanie joined us last year as our great CFO, and then Robert and Tyler both with the company for 8 or 9 years, and so a great leadership team. Both, I think that the next level of leadership deserves a lot of kudos too for leading up our business on a day-to-day. And lastly, as we turn over to Q&A, I'll just flash up our contact information here. We're always really happy to hear from you and answer any questions that don't come up in this session as well.
It was great to have you present again. We do have quite a few questions, so I'm going to try and get through them all. Let's start off with John's question. Do you have any problems sourcing raw materials?
I wouldn't say problems. Like definitely, it's become like in all industries, right? I mean, supply chains have been constrained in the last 12 months, and so that has made it more of a seller's market than a buyer's market. For all of the projects we built in 2021, we were at or under budget. So it's not something that we've been blowing our budgets or what have you. And we are starting to see positive signs in terms of cost of materials and so on for 2022. So no problems getting equipment. Equipment was a little bit more expensive than we would have liked, but in the grand scheme of things, no big deal.
Okay, great. Here's a two-part question. What would be the annual maintenance capital per unit of the project per megawatt? And what are the life of projects and replacement capital is after how many years? 3, actually.
Yeah. So a number of good questions within that. And I may need I'll answer what I can. If I forget anything,
we can come back to them.
So kind of in reverse order, a typical solar project nowadays is seen as a 40-year asset. Solar panels in particular typically come with at least a 30-year warranty. And the way this industry grew so quickly in the last decade, those warranties are actually backed by insurance. So the manufacturers actually pay for an insurance company to back their warranties. So gives credence to the idea that these are very long-term assets. So when we're looking at the capex for updates or whatever over time, it's actually really low. There is some components, namely like on the electrical side of things, where we do forecast that halfway through, in essence, the project lifetime, we will renew those pieces. But for I don't have a specific number, but for like a megawatt project that might cost let's say 1.4, 1.5 million to build, we might be talking about let's say 20,000, maybe 30,000 in terms of replacement inverters 15 years from now. So in that scheme of things, solar, one of the great things about it is just how long it lasts. There's no moving parts. There's much more like early stage technology in this industry that's been out there in the field for 20 years and is still operating well. So yeah. What was the first part again, Sophie?
What would be the annual maintenance capital per unit of project per megawatt?
Good question. I don't have that number in front of me. It is, yeah, maybe the best thing I can say off the top of my head, and this is something that, feel free to follow up with me offline, and if this is public info, we're happy to share. But the best thing I can say offline is like the EBITDA numbers that we looked at earlier, those are like 75 to 80% of revenue of our recurring revenue. So once these projects are operational, it is very high margin revenue.
Okay, excellent. Thank you. Kevin asks, what would be your immediate competitor?
Yeah, on a day-to-day basis, the developers that we would see as competitors or comparables within the market are almost all private. I'm struggling to think of a public company. Maybe there's a few that have a small piece in the market. Amoresco does a little bit of this, for example. But for the most part, we are coalescing as a real leader in our space, having this full life cycle approach, having all the experience that we do. So it's mostly more regional, smaller companies. And also within our space, like, yes, sometimes we'll be speaking into a company that's also speaking to another developer and there's a bit of competition involved. Very, very rarely there's an RFP, but for the most part, it's actually a matter of like each of these developers solving their own Rubik's cubes. As you lock down the rights to do a project and then move it through all the steps to make that into an operational project, where there's a lot more competition within the industry, not necessarily with UGE, but within the industry, is there is a lot of capital looking to own these types of assets. And so like we get called multiple times every week from funds and so on that are looking to buy assets from UGE. Now we find that like in the medium and long term, we're going to be a much better company holding on to those assets and capturing that value ourselves. But that's where you see a lot of the bigger names, like the renewable IPPs in Canada. They're looking to buy portfolios of these types of assets and so on. In December, there was a SPAC transaction in the US. A group called Altus, which is one of those funds buying assets. They do a little bit of their own development, but as I understand it, virtually all of their portfolio is from buying assets from others. They're probably the best comp, although you'd certainly expect UGE to capture more value out of these projects over time because we are the developer as well.
Okay, thank you. Is the goal of 100 megawatts per year of installed capacity reliant on the Build Back Better Act? And if it doesn't pass, how will that impact the company's growth?
Yeah, it is not in any way dependent on Build Back Better Act. And in fact, if you take the 150 megawatt backlog we have now, which similarly is not dependent on Build Back Better, and you take our guidance in terms of how quickly we deploy these projects, which is typically within 3 years, and you just think about end of 2021, end of 2024, we do expect to be well in advance of the 100 megawatt goal, just based on what we have right now, what we're doing right now, and in absence of the Build Back Better Act. Now, if that comes through, it's going to open up that much more opportunity. It's going to also boost our returns in the way that tax credit would be expanded and enhanced. So there is a lot of upside in that, but no, we're not dependent on that at all.
Okay, and since you already hit your goals, when do you think you'll be able to provide updated goals?
It's a good question, and we're so excited about what we're doing. Sometimes our internal goals and projections sound kind of silly. So I think that probably around our 2020 like 1 year ends, which will come out in April. Probably at that point in time, we will come out with updated goals that take another sharper look at where we're going and provide some updated guidance there.
Excellent. We're going to look forward to those. How are your current builds progressing? Are we going to see any news releases about this in the future?
Well, in terms of how they're progressing, we had about 1.5 megawatts in operation when we reported our Q3s. We have about 1 megawatt in construction right now, all of which are expected to be operational, if not first quarter, the first half of this year. So that'll double our operational base right there. But then also we've talked about there's I believe the number was 10.8 megawatts of projects that last time we released results were in the coming months. We were expected those to enter construction. So if you take the 1.5 plus 1.5, you're talking about 3, another 11 or so that we're getting close to construction. We're going to see the number in construction, and then the construction is actually not really the hard or the time-consuming part. So once they get to that point, it'll be a matter of months or a couple quarters for those to become operational assets. In terms of will we see announcements? I'll just say, broadly speaking, we'll make sure we're keeping the market updated in terms of the good work and progress that we're making in that regard, whether it be completion of projects or funding of the next projects and things like that.
So a follow-up question: what factors make you believe that you might be ahead of schedule on the target of 100 megawatts of operating assets in 2024?
Two things. One is we had based that on having 120 megawatts at the end of 2021, and then if you take a kind of a conservative tail of 3 years of building those out, and you knock down 20% for conservatism, that was your 100 megawatts. Now we exceeded that by a significant amount and had 158 at the end of 2021. So if you take the same type of measure, you're well in excess of the 100 megawatt goal. So I think that's really what it's driven by, is our just being so ahead of schedule in terms of how much we're developing here. Okay,
great. The famous question: when would you expect to be cash flow positive based on current or 2022 anticipated contracts? So free cash flow.
Yeah. So and thanks, Sophie, for saying free cash flow, because there is a big difference in the business here, like free cash flow versus net income. And so on the cash flow side of things, our cash flow is quite a bit ahead of net income. And the reason for that is this developer fee, as we refer to it, it's like this distribution out of our projects as we build them, doesn't hit our income statement, but it does hit our cash flow. And so on that basis, the number of projects that we have entering construction this year, we expect to be able to get over that hump of being cash flow positive from that basis by the end of the year. Net income is going to be a little bit farther out. Hopefully it'll lag by about 12 months. But I think also probably the market, thinking about making sure that we don't need to raise money and so on, you should be excited about that. I'd be remiss not to say, we did announce a week or two ago that we had signed a term sheet for a development capital loan facility. Like it's a loan facility at our U.S. subsidiary level that allows us to give us the capital that we need to build out and grow the company without tapping the markets from that perspective. And so we really feel like the assets that we've built up here, whether they be operational or in development stage, are giving us the legs to stand on to make sure that that shareholders can benefit.
Excellent. So one last question before Paul asks his. What would you say are your biggest challenges moving forward?
Yeah, I think it's mostly a matter of time and people understanding that that it takes time in our business. We're really happy with how things are progressing, but I'm sure people would love our 2024 recurring revenue profile to happen now. I think what we're looking to do on our side is, of course, continue to grow the business and so on. But people should also start to realize the credibility in what we say from all the experience, from the backlog, from the ability to, if all went to hell, we could literally sell our backlog right now for more than our market cap. So, I think it's mostly this time consideration. We're super happy with the industry, super happy with the team, and really just a matter of continuing to grow and optimize what we're doing here.
Thanks, Nick. Paul, do you have a couple of questions?
Just a couple. Nick, what's your cash and debt position right now?
I know it was on a slide earlier. It would be a couple months, I guess, outdated now. But cash would be in the low single-digit millions.
Okay.
And then on the debt side of things, we have a few of these kind of COVID programs type of stuff, which I don't know, mid six figures or even mid six figures. The only debt that we really have is a 2 million convertible note, and that expires in late 2023. So very low on the debt side of things.
Right now,
I'd be remiss, Paul, not to say, our projects have non-recourse, non-dilutive debt, like within the project level, which is part of how we fund those assets. There's at this point in time, I believe it's a couple million or so at that level. That will scale up as our projects scale up, but it'll scale up as a lower. It'll scale up with our assets, right? Our assets will grow faster than the debt there.
I just want you to touch on one thing. You hire contractors to build all your projects.
Yeah.
So you are not responsible for the construction of these projects.
That's
So
well,
if they have well, if they have trouble on their end, what are the consequences to you? I guess that's the point I'm getting at.
Yeah, I think from all the experience that we have, our contracts, we make sure that we have our protections, that if they're late or if they have cost overruns or what have you, that we're protected in that sense. So we do have an engineering department, and we have very skilled project managers which are hiring and looking over those subcontractors. They, like, for example, the head of our project management team, who's responsible for that, he grew through the ranks at UGE, originally being a construction manager when we used to be more responsible for building assets ourselves. So have a very good I think handle on how that goes.
Are your projects, when you put the project in place, are they all live as far as like generating power, or do they all have storage capacities where you can store power in case of emergencies or whatever?
Yeah, virtually everything we've done so far has been standalone solar. So working with the grid to be collaborative and work together, and that's just the way solar projects have traditionally been done. But with the cost of storage dropping so rapidly, it actually, it's something that I suspect that probably the February version of our deck will touch on this a bit further, because the storage side of the distributed generation industry is growing very rapidly right now, and that Massachusetts expansion touched on that, in that our whole Massachusetts pipeline includes battery storage. So it is getting to a point where battery storage makes economic sense in more and more states. We've just recently made a decision that in New York, all of our projects going forward will have battery storage. And I think the best way to think about it is, if you have a project, let's say that there was a project worth 5 million, it was standalone solar in terms of like a fair market value of that project. If you added an equitable amount of storage to that project, that would make that project worth 10 million. Like, solar and storage are very similar assets in terms of their value. Yeah. So it's pretty big upside.
Right. Sophia, do we have any more?
Yes. As projects come online, the company will generate a lot of cash flow in the next few years. How do you plan on using that cash flow? Yeah,
good question. I think that now there is tremendous growth opportunities. So, first and foremost, as long as we are, like, for example, the 100 megawatt goal, internally we're looking at what year are we going to get to 1 gigawatt. And I'm not saying that's going to be what our goal is that we come out with, with our year ends. But like, we have tremendous amount of growth opportunity here. So there will be a consideration about expanding our team into new territories and things like that. But at the same time, like, we do really like the cash profile for how our business is looking as we forecast it out. So does that lead to share buybacks? Does that lead to paying off debt within our projects, or whatever the case may be? We're going to look forward to having those considerations.
Okay, I got one last question from you. You mentioned in one of the slides that it's 40% insider ownership. Do you have any funds invested in UGE?
We do, yeah. We did a raise 12 months ago. That we raised 7 million CAD, and that was almost all institutional. 6 point something of that was institutions. And I know that since then we have had some institutions pick up shares as well. So our story has become more institutional in the last bit. It's just to tell a funny anecdote, but when we were raising that, when we were doing that raise 12 months ago, I remember our share price was trading in the high twos, so virtually twice what we are now. I remember the funds we were talking about just how cheap we were at those levels, and we had a 60 megawatt backlog, and now we have 160 megawatt backlog. So I think I really appreciated the invite to come here today, and really as the year gets underway here, looking forward to getting out the story about all the good things that we're doing, and hopefully attracting some more institutional interest as well as, of course, everyone on this call and so on.
Yeah, well, I mean, Nick, great story. You've got great news coming in, like moving forward. So thank you so much for joining us today. You're always welcome to come back anytime you ever want to give us an update to our people. Thanks for everyone who attended, and be careful out there, be safe. And Nick, take care, and we'll talk to you soon.
Thank you so much. Take care.
Thanks, Nick. Bye-bye.
Bye-bye.